Hi, my name is Kris Krohn, and what I want to do right now for the next few minutes is I want to talk about real estate and market cycles, because real estate moves very different than the stock market. It moves different than a lot of other cycles, and I'm going to draw us a picture here, and I'm going to illustrate some principles. And I got to tell you something. The reason why I'm doing this is that there's a lot of people that want to know, Kris, you buy a lot of real estate, you help a lot of people buy real estate, but when really is the best time to be buying real estate? What I want to do is I want to answer that question. And to do that, I want to draw us a picture here. Now, there's a couple of things that we can all agree on. Real estate, over time, it goes up in value, right? I look at the very first house that I ever bought. It was built in the late 40s. And that house, I was told, was bought for and built for $5,000. I don't know what a house like that would have been built for at turn of the century, but I'm guessing maybe $100 or something. Today, houses, the median, they sell for a couple $100,000. So one thing we know about real estate and inflation, because population is pushing up on the market, is that real estate inflates and it grows in value over time. This is one of the things that makes it a really great investment, especially in a really challenging economy, because hard assets go up in value. And real estate is a hard asset. Now, we also know that real estate does not move in these perfect linear movements like that. In fact, the real estate market might better be represented like this, which means that there's high points in the market and there's low points in the market, but otherwise we have a moving median of homes that generally increase in value. Now, one of the principles of REIC is that we always purchase our homes under value. In fact, you can draw a line here and see that when you read my book, The Straight Path to Real Estate Wealth, that we're always talking about buying at discounts, significant discounts. I want to talk about this market, and the first concept that I want to introduce that you can do some research on is I want to talk about the K-wave cycle. I want to talk about the Kondratiev cycle. And what that cycle is that you research, and what it substantiates is that real estate moves in seasons. And just like there are 4 seasons, there are 4 seasons in real estate. And we can see these seasons right here. We've got winter, spring, summer, and fall. And if we actually look at an entire market cycle, we can break it up right here. Do you see those 4 moving pieces? Now, the exciting thing about the way real estate moves versus the stock market is that it moves predictably. It moves with trends. And so one of the things that you'll find is that real estate doesn't move from spring to winter. What it does, and sometimes you have shorter seasons and sometimes you have longer seasons, but it generally always moves from winter to spring to summer to fall, and that cycle repeats itself. Now, right here we can see this is the low point in the market. We can also see that this is the high point in the market. And a lot of times people will say, well, Kris, as far as when the best time to invest in real estate is, that's always going to be at the low point, right? Because real estate will always move up. One of my principles in real estate investing is that if your strategy depends on market appreciation, then you have a flawed strategy. Why? Because it's not always going to work. You better be really good at reading the markets and the trends and the way real estate moves, because if you get it wrong and everything is based on appreciation, what happened 5 years ago? We're going to talk in a moment about investors. There are different types. There's expert investors, there's novice real estate investors, we've got skeptical investors, and we've got pessimists. We're going to talk about all 4 of those in a moment. But first, let's get back to one of the principles of Strongbrook REIC, which is a principle that comes directly from Warren Buffett. Now, Warren Buffett is a very successful businessman, and if you read his book, he talks about buying with margin, and he talks about basically getting a discount. In fact, the greater the discount, the greater margin of safety you've created. REIC is committed for its own portfolio and for its clients in buying real estate here. So if this is the market, which I'll just put that on here, then I'm going to label this one Strongbrook REIC, which is if we can create a margin, sometimes we buy homes at a 15 or a 20% discount, that represents a margin of safety that helps insulate us when the market is moving. Because have you ever heard the term real estate bubble? I'll show you exactly where that is. In fact, what does this look like to you? That looks like a bubble, doesn't it? What that means is that if this is the trailing and this is the moving median, then what we know about real estate is that sometimes the homes inflate over that median, and then they course correct down into the winter and the spring, and down here you have the trough, or you have the low point in the market. As far as when to be investing, if you're always purchasing real estate at a really great discount, then you create a really awesome margin of safety. That's one of the principles you need to adhere to as best as possible when investing in real estate. One of the other ways of creating safety in your real estate portfolio is understanding this principle. If we're buying significantly below the market, which you can see represented by this market line and this REIC line. And by the way, this drawing is for illustrative purposes. It's obviously grossly inaccurate. This is for the purpose of teaching principles. What you're going to see is this bubble represents what I call pseudo-equity or fake equity, because the market has to correct. It's not very real. Likewise, down here we have what I call unsubstantiated equity. Right now we're going into markets, and we call them our hot markets, and we're buying real estate significantly below the rebuild. But because the market is re-emerging and coming back, and because the value of a property is discerned by an appraisal, which talks about what things were selling for 6 or 12 months ago, what does that mean? That means that in a re-emerging market, we often can't substantiate the equity that actually exists in a property, and only time will tell. So, with all of those different factors, this is the last principle that I want to share with you. I want to talk about when people invest in real estate. And I'm going to ask you a question. When you look at this scale, where do you think the experts like to get in if part of their strategy is gaining value on their investments by appreciation? The low in the market, right? No one has a crystal ball of knowing when that is. But right now, my guess is that in a lot of these hot markets, we've already seen the low. How do we know that? Because those markets are already coming back. Sometimes people like to ask, but what if there's going to be another drop in the market? That's what the stock market does. Real estate in general, with the K-wave cycle, says we move from winter to spring to summer to fall. It moves very slow. I really love the predictability of real estate because we have history and trends that teach us a lot. If you look up the curves, and if you look up the graphs on GDP and how it moves with real estate, it's going to teach you a lot about where we are right now. Now, we talk about 4 different kinds of investors, and I'll call them our expert, our novice, and our skeptic, and our pessimist. And what I want to do is I want to illustrate that here on the graph, and I'm going to use this red color here to represent when do most people invest. We already pinpointed that the bottom of the market is the most intelligent way to get some of the most obvious discounts, some of the best discounts over time. Who's buying here, do you think? Do you think it's the skeptics or the experts? This is when the experts are getting involved. They're buying real estate here because they know with their strategy plus appreciation over time that you stand to gain the most here with the predictability in real estate. So, however, do you have the most amount of investors interested in real estate investing or the least? You have the least. Only the experts are out there doing it. So over time, as the market goes up in value, do you think more people get involved? Yes, we actually saw this before we even created Strongbrook REIC, and we're buying all sorts of houses as we experienced the last turning point in the market and now the bottom and the slow move forward. So I would actually draw it like this. And this represents the population of investors that are getting involved. And I'll show you, this is roughly where the experts are getting involved. This is roughly when your novice investors are getting involved. This is when you have a tremendous number of people. These are your skeptics. Those are the people that said, man, we've been watching and seeing all these other people make money in real estate. Maybe we should jump in. Do you know when the pessimist jumps in? They jump in generally right here at the height of the market. And what they're doing is they're actually going to experience that self-destructive pattern all over again. They're going to see pessimism because most people, when they see the market trending up, when they buy, they're not thinking of buying at that REIC discount. They're looking at just saying, hey, if I have property ownership, then it will go up over time. And that's, again, one of the fallacies that we see in real estate as well. And so understand that as the market improves over time, you're going to see more and more and more and more people jump into real estate because they now have evidence. They now have evidence that the market is improving. But a creator, a conscious creator, a very intelligent person, someone that's sophisticated, someone that reads these trends and understands the way the market moves, they won't buy just because the market is going up in value. They're going to buy at that trailing discount in the very best markets. Friends, that's what I wanted to share with you on market cycles. If you want to know my answer to the question of when should a person be investing, always. You just got to understand these principles and invest the right way. Because when we helped hundreds of our clients purchase at the peak of the last market, we were able to create and insulate them from a lot of the drama that happened in the market. We created protection for them. How do we do that? Because of our strategy and understanding cash flow and holding on to that property and not necessarily needing to sell. And what we're seeing right now, if you want to know especially when to be investing, right now, no matter where you want to argue where we're at, we're buying homes at tremendous discounts. We're buying them with tremendous cash flow. And my advice for anyone is to consider looking at real estate. Come to understand these trends, and if it makes sense, get involved. Thank you.